Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Thursday, December the 2nd, 2010, and like we do every night, it's time to look at the market, so check it out. Okay, let's start off looking at the Dow Jones Industrial Average. This particular average is up 106 points for the day. That's about 350 points between 2 days. And there is volume behind this move. We talked about that yesterday, and it's continuing today. We expect this to continue to move to the upside. You'll notice you do have more room to go to the upside before you get above the 80 line anyway. So there's more room to this move to the upside. Here's what's going on in this market. You've had two arguments. The argument from the bulls has been POMO, whatever the Fed's purchasing plan is going to prop up and drive prices higher. We didn't argue against that. We just argued from a bearish standpoint that the Europe credit crisis is bigger, and when it blows, it will outweigh or trump the Fed's little purchasing plan. That works until you get situations where some country comes out and says, "Oh, we've solved the problem," or we've swept it under the rug. Yesterday, the U.S. came out and said they would help pay for the bailouts going to be needed in Europe through the IMF. If needed, they would help. So that, again, has swept it under the rug. But here's what I want you to remember. That's not the first time we've tried this. Okay, we did this with Greece. We've seen China come out and give money to Greece. We've seen the IMF. We've seen all these different people try to sweep this under the rug, and for a time it works, but then it flares up again, and that causes us problems. So that's what you're looking at again. You've seen it in the past before the flash crash. You've seen it recently for the past couple of weeks. You've seen a major sell-off during the news out of what's going on there in Europe, and now we've jumped back up again as people have trying to put that fire out. Here's what I want you to do. Go look for a quality long opportunity. That's all you got to do. There are a few out there. They're not a plenty. You don't go just buying anything because you have to actually find something with quality there. And if you want to play that from the long side, you can do that, but keep one eye on what's going on over there in Europe, because if that flares up again, you need to be getting out of your long positions. All right, that's the only way to understand. I got a lot of people asking, I don't understand. You're getting bullish. No, I'm not getting bullish. I just see some bullish opportunities out there, and as long as they're out there, I'm going to post them on our free website at perfectstockalert.com for you guys to check out. I'm going to trade them on the long side because they're going to make money, and why would I pass that up? But at the same time, I know that the problem in Europe is not actually gone, so let's keep an eye on that, okay? You have to respect the volume here in the Dow Jones Industrial Average. When you've got a nice major move like this, like we talked about yesterday, and you've got substantial volume behind that, and again today, and improving volume behind that, that's going to have to get your attention, all right? There are trade opportunities out there. That's important to note. At the same time, it is not a game changer. It's temporarily ignoring some problems that will flare up again in Europe, but it's an opportunity to trade to the long side, so you can use that. Sorry about that. A quick look here at gold. You do have a tweezer top formation, basically two shooting stars. You'll note the wicks out of the top right there, and little small bodies below them. Those are sell signals. Okay. What's more concerning here is that it's still in line for a head and shoulders pattern. You have the first shoulder here, or the right shoulder. Okay. There you go, the head. All right, there you go. Chart disc gets sell signals. If it rolls over, comes back down here, and breaks this neckline, then it would be a head and shoulders formation, and it is a major sell signal. A quick look here at the NASDAQ. This index has also gone up, moving up to fill some upper gaps that you had there, but not the same degree of volume behind the advance here. You got to pay attention to volume. Where is the smart money? Where is the money flowing into the markets? Is it in this sector, that sector? You got to pay attention to that, otherwise you're buying the wrong stocks. You want to be buying when they're buying and putting a stop below their entry points. Okay, so if you have that volume behind your trade, you're supported. If you don't, well, then it's just fluff, hot air. It's going to end up failing. So I'd be really cautious here in the NASDAQ. I don't like this chart anyway, shape, or form. And again, volume confirms that there's greater selling, there is buying. And even on this move to the upside here, you're just really not getting a lot of interest here by smart money to buy the NASDAQ at this level. Someone asked me to look at Canada's markets, TSX. You need to cover that short. You've got a lot of volume coming in on this move up here. Okay, this is just going to continue to do this unless that problem in Europe flares up again. Otherwise, look for the uptrend to continue. Okay, as we said before, anytime you're analyzing U.S. markets, you can double check it against the VIX. The VIX runs the opposite of the overall market, so if the VIX is bearish short term, then you should see a bullish short term move in the overall markets. That's what we're talking about seeing here, and we expect that this candlestick formation here to the downside, we expect to see more move to the downside. But from a midterm perspective, taking this into account, not just this, you can see that we still have a very bullish opportunity on the VIX, which translates to a bearish opportunity on the overall market. So there's two different time periods in play here. You've got the very short term that's driving markets higher, the VIX lower, but the bigger picture still shows an uptrend in the VIX right here, very clearly defined, meaning that this downtrend here is false, which means the overall market rally from September is all false as well. That's where I go back to when the euro credit crisis thing flares up again. That's when you're going to get that sell-off, and it's going to make this get justified. All of this will get taken back out. We'll drop back up here, solving this problem, okay? Which will also justify the NASDAQ chart and all those other gaps that you got in the patterns there. So everything makes sense. You just have to understand it from different time periods and say, okay, this means this short term, but this means this midterm, and so forth and so on, okay? Now you know what I know. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. We do have another video alert coming out on the website tonight. Be there in about an hour. So check that out if you'd like. Quick look at our disclaimer. The disclaimer, read it and weep. God bless, take care, and I will see you in the next video.